It's still in the conversation because of the privacy focused AI narrative, the staking model that ties token ownership directly to compute access, the association with a well known crypto founder, the activity around AI agents, and the simple fact that any project offering decentralized or uncensored AI infrastructure continues to draw attention in a market still heavily focused on AI themes. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on VVV. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to mixed for an extended period. You will see a mix of hold and mild sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Venice than for lower ranked names because of its ranking and AI narrative, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. What's going on with Venice token right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Venice token is the native utility token of Venice AI, a private and censorship resistant generative AI platform that offers text, image, and code generation built on open source models. Staking VVV grants users and AI agents proportional access to the platform's inference capacity without paying per request, aiming to create a more open and uncensored alternative to centralized AI services. It currently ranks near the top 80 by market cap with moderate daily volume, and the price has been trading near the levels you're seeing after a decline from previous highs. On the technical side, the bigger picture remains a clear long term corrective structure from the higher levels reached after launch. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi month levels. Short term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish to neutral, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. That's the classic trap setup. The technology and privacy angle are real, the platform continues to operate, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here, buying the private uncensored AI will eventually meta argument, while the larger trend remains downward or sideways. Here's the real debate. Is VVV actually undervalued at these levels, or is this a value trap after the post-launch decline? One side points to the private and uncensored AI model, the staking mechanism that directly links token ownership to inference capacity, the focus on AI agents and developers, the distance from previous highs, and the idea that privacy first AI platforms could re rate if capital rotates back into decentralized AI narratives. They argue that if usage of the API and staking grows, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many AI related tokens that peaked during strong narrative runs have struggled to hold value once attention faded. Volume and momentum have been soft for long stretches. Competition in the AI inference space has intensified, and the market has consistently treated VVV as a lower priority name despite the underlying product. Risks are meaningful. Volatility is still present. A broader risk of move in crypto or continued rotation away from mid-cap AI tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term private AI infrastructure story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure microcaps but still thinner than the very top names, so larger moves can still happen quickly. There is also the structural risk that comes with any AI utility token. The narrative has to keep generating real staking demand, real API usage, and relative interest, or the token simply fades under competition and shifting attention. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Venice can convert its private AI platform and staking model into sustained demand and relative outperformance for the VVV token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to AI narratives. Venice sees growing staking and inference usage. The token remains central to capacity access, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Nobody knows which way this resolves. The chart is still fighting the technology narrative. The platform continues to offer private inference, and the market remains selective about which AI stories it rewards. So, the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher, or are we just watching another established AI utility token settle into a prolonged period of low relative interest while people argue about valuation?